So I pulled the daily charts, and I also pulled the weekly charts. So according to the book, those are the charts that we will look at. Reading the charts are so important. And so not only, so if you are not a stock buyer, but you buy crypto, you can still, by learning how to read the charts, you can use that same knowledge of reading and understanding the charts. You can also do that with crypto as well. So you'll see that some of these things will just roll over into other investments. So I'm just gonna decrease my screen and pull up the actual. Okay, so here's a daily chart. And so it tells you a breakdown of what each line means. So like number one is the price. The price area shows daily changes in the price. So tomorrow, Facebook could be it could be $1.99 or it could be $2.50. So number one tells you, it will tell you the price of the stock. So to the right of the chart, which is over here, is the price. Number two, which is down in this area, those are the volume bars. So the vertical bars in the volume area indicates the volume in the number of shares that is traded in the stock. So down at the bottom, those are the banks, those are your pensions, your mutual funds. So those are huge, large accounts. So like if you have your 401k would be down at the bottom. So if there's banks just selling off this stock, or mutual funds, because mutual funds usually is a collective of companies. And so say like your 401k has this particular stock in the portfolio, but they're selling it off, that gives you an indication. So the red lines is the sell-off, the blue lines is purchases of the stocks. So that's something that plays an important role. So if you have the large 401ks and the mutual funds and the banks that are selling this stock like wildfire, why would you stay in if the larger institutions are selling it? So that's an indication. The number three is the moving average line. So it's the horizontal line. So you have your 200-day trading days and the share price over the 50 trading days. So you can look over these lines and say, okay, well, this one and then the red one. So over the last 50 days, you can see your stock like, you can see the movement of it. Has it been going up or has it been inching down? So again, this is something that is relative to your decision on whether or not you want to buy it. And then number four is the line compares the price movement of that particular stock to the price movement of the S&P 500. So it's showing you, according to the S&P 500, you see the S&P 500 is on the rise, and you can see where this line has fallen. Well, this one is the 200-day. So if you see that it's getting close to the line or falling under the line, you know that it's getting weaker versus if it's keeps rising above the line or staying consistent with the line. That tells you something there that is strong going up. But we're looking for stocks that are falling in price. And then I want to show you the weekly, which is very similar. The only thing there is that number one, again, shows the price of the stock. So if you look over here to the right here, we have on this day, down here is the lowest price that that stock fell. Because if you notice from the day, sometimes there's movement before the stock market opens. And then from the time it closes, it's either going up or down because you have buying and selling going on. And so when it's close to the high price, that means that the sellers outwon, the buyers are the ones that controlled the price, that kept it close to the high point versus the sellers. Like if the line was red, that's letting you know the sellers was stronger in the movement of the price for that day for the stocks. And so on the close of the day, when the market closed, it stopped right there on the line. So throughout the day, this was the highest in price it was, and down here is the lowest price it was for the day, and this is where it ended at the end of the day. So let's say on this day, you said, hey, the price is going to drop, but it actually stayed strong. The buyers kept it moving to the higher market mark, not market, but mark. Same here. Number 2 is, again, the institutional buyers. And you can see how it's pretty much, you can see here it was kind of low, but then it was going kind of high. You could tell here that this went over. Now this one is a 10-week. So over the 10 weeks, it was strong here. And you can see here, there was a large sell-off here. There was a large buying here. And then 3 is the moving average line, which is there. And again, this one consists of 10 weeks of trading and or 40 weeks of trading. So there's this red line here and this line right here. And then number 4 is relative strength line. So that's this one in here. So just to see it in a bigger light here and with the magnifying glass. So as you can see here, this almost touched the line. But you can see it was a big sell-off here. So you can kind of like go down and say, okay, if you see a lot of red lines versus the blue, that's telling you something. And then one thing that I know too is that, when they start selling off stocks, it's not like one big dump. They gradually start selling it off because that would just cause the market to react in such a crazy way. So they have to, sell so many stocks at a time, but at least that day there was a sell-off. And those are things that you're looking for when you're selling short.